Let me know if you can see the screen. Perfect. So this is US dollar Swiss franc. So we are literally, I'm gonna start here. So I remember taking this trade and I remember thinking, or like having my thought process. I look for range. Let me know about this range. There's some people that may see that the range would start here, down here. Um, I selected this one. I feel like this is a good place. It's gonna be like some kind of a liquidity levels here. Um, if there's anything that doesn't make sense, please let me know. I really appreciate your feedback. But pretty much I'm charting this, and then I run Fibos for like these specific. We can move it forward. Oh. Yeah, some here, and then I see that the price is going up, and there's a 30 minutes here on order block, and it's there's two different Fibos that they're aligning with this. One Fibo is this one right here. No. One is this one from this high to this low, and then the other one is from this low, I think. No. Anyways, so the price goes up here, and this is a trade that I didn't take. Oh, okay, now I see. Okay, the price goes down here, so this is another Fibo that I checked from this one to this one, and this one, this high to this low right here. And then I see the 705. Then I move a little forward. Then the price hits there. I was literally just like staring at the screen, so I didn't take that trade. And I'm like, okay, but meanwhile, I see this hidden order block, in which is an hour, and then there's the different confluences with Fibos. So I'm like, okay, I'm gonna take this trade. Wait, I put the limit order there. Then price about to hit, it hits. I put the SL a little wide. I think there was another, some kind of order block down here. And literally as soon as the price hits down there, I can go this a little faster. Hits again. And then I took 50% of the profits here. And I'm like, as soon as I take the 50% profits here at 0.5 from this swing, what I did was I canceled the TP. I'm like, okay, this is gonna go all the way up. It's gonna go up here. And guess what? It never did. And I stopped out. So I think I got greedy. It was like literally my take profit was literally around here. Like honestly, I think it was like honestly here. But I was like, okay, I'm just gonna cancel it because this was going up so fast. And I'm thinking, okay, it's gonna go through everything. This one got hit already, so it's gonna go all the way here. So that's when I'm gonna take full profit. But I didn't do that, and then price went all the way down. I put the SL at break even when I sold 50% at 0.5, and then I got the stop out. So that's the first one. Uh-huh.
My mic is not recording. Give me a second. Here we go. No, it should be fine. So we see. So you see, you made a profit with this trade, and I love your reflection. I love your analysis. Um, you then stop following the plan, as it seems,
Yeah.
and this is a good lesson because first of all, the trade is profitable, which is great. It's a win, right? Right? See it as win, and then on top of this profit, you also were able to learn something because you reflect on that, and next time you should probably follow the plan. But as
Mhm.
said, great trade, great analysis, great reflection. You can definitely book this as win in my view, like from a
Right.
learning
Right.
perspective as well.
Okay. In terms of the ranges, would you like would you think about this range, this part of it as a like part of the range, like because I have like always like in terms of okay, am I buying? Am I taking a long trade when it's in a discount? Like this obviously changes a lot, right? Because this will probably around like 50%. Yeah. So like what? So what? When do you decide which range you want to take?
This is a difficult one, especially on Forex. I would define it the way you did it, but you can look for confluence for the full swing, obviously. So if you take for the full swing, can you drag it there, please?
Yeah.
You still have confluence for your level, you see? You still have the 0.5 for
Mhm.
your level. And this is great. It's not about like perfection and having the right swing all the time, but adding confluences on top of each other, stack them. So look at this one, decide, okay, if it's like way above the 0.5, you might as well want to say, no, it doesn't look that good. But because the 0.5 is within your area, you include it into the stop loss, makes perfect sense in my view.
Okay. Okay. Sounds good. Yeah. So far, I think this is probably there's nothing else here for this particular trade. As you said, I think it's good that I was able to take some profits. At the end of the day, I have $100 account, and I'm my risk is 1%. So I do like SL. It's one. My risk in the stop loss is $1, and then this one was, or I was like close to was 3.13, which at the end of the day, like I sold 50%, and like probably I made like $1 out of it, which it still is the learning process, and it's part of it. Um, but like it's not like a lot of money, so I'm fine with it, just like making mistakes now. But I feel it's good to like at least be trading with like real money.
That's the right mindset.
So that was one. What else we have here? I made some trades, and all of them, the rest of them are lost. But I would love to share them with you. Uh, there is. Is one that we talked about. I'll go with this one. What do we have here? Oh, that's the one that I posted. Yeah. Let's see. The price is going down. I'm in this trade, but what is my SL? I had an SL here. So you remember these, right? From the go
Mhm.
back to 3 days. That's the one that I posted in the student discussions. I have a 3 day here. It aligns with um, the 0.75 from this low to this high. I should have, and I think you're right, I should have put the stop loss here. It's always covering the fair value you have, right? You don't have to cover. Do you usually cover the week from this candle right here?
I mean, then it becomes like pretty wide, but for
Yeah,
the 3 day level, I would at least cover the wide FVG still at least. Like yeah, to
this
this
one, right?
yeah
Literally as it is right now.
yeah this would have been like the 3 day in my view.
Okay, and then question, and I think I asked this question again to you before. This is technically not a break of the structure,
It is.
right? It is. Okay. And what if the price breaks? Well, actually, the price broke this high too.
Mhm.
So you have the high low. This is an uptrend. I mean, technically, it's an uptrend. And then below, we should consider that this is the low. High low. Would you
Mhm.
consider this is the low in order to like to change to like have like a shift in structure? If
Yeah,
it breaks this low, then most likely it's gonna turn into bearish.
yeah, and also the level where you took your trade like the 4 week and all that, if this should break, I would say, okay, this is the first internal lower low, which is the first bearish sign. But the bigger line you drew, this would be the confirmation. Obviously, you want to get early signs, especially if you're long, especially if you look for shorts and all that. You want to get early signs. This would be an internal, but we would probably bounce from this demand, and then your line, the dashed line, would be the real break of structure, the real change in
Yeah.
trend.
Okay. If the price breaks this low here, we're assuming that it's getting weaker.
Exactly.
So I need to be cautious when placing longs.
Exactly. First signs of weakness.
Okay, perfect. Thank you. So going back to the trade, I tried to trade the 3 day, which didn't work. And then I'm like, okay, that didn't work. It's fine. I was trying to place a long trade here. But then I was chatting and I saw this hitting order block at the 10, 17, 19, 20 hour. I mean, it's a little small. The body is like 19 hour, 17 hour, and there's a 10 hour too. So I'm like, I don't think I should take this trade. And I did not, and I'm happy I didn't, because the price went back down. I mean, it would be an option. I wasn't just feeling confident about it. I don't know what your take on this. Like, if you see like a, hitting order block, like in the very side, and you wouldn't place this trade, right? Like, I don't think it makes a lot of sense.
I mean, because obviously also the big FVG below and the 3 day below, you have definitely a reason for price to go lower. What's interesting here is that your area of the 3 day is already wicked, like where your mouse cursor is, on the green box of the 3 day, you have no real FVG
Here,
there. Yeah, no, yeah, here. If you want to refine your entries, you go down to lower time frames and you check where there are real gaps at the chart. And your 3 day is on the 10 hours already touched, for example, and it will probably even be touched on the daily. So there is no real gap on the chart anymore if you go to lower time frames. This is something you might want to look at. And with this big FVG below still and this big demand below, the 10 hour, 17, 19, 20 hour thing here is not that optimal. But it could bounce, obviously.
okay, okay. I want to make sure that I understood. Uh,
And a easy rule of thumb is the more at the extreme you are, like the closer to the extreme of a range of a swing, the more optimal the level gets. Here, obviously, if you
aha,
take the 10 hour and you have still a lot of liquidity, untouched areas, FVGs below, it becomes less optimal because it's not
right.
at the extreme of the area and you have like a reason for price to go even lower.
Okay, okay. Then I will go through the 3 day. Just wanna. Okay, so I have the 3 day here. So technically it could be. Let me know if I'm understanding what you said. I think I got it. But so this is a 3 day, and there's a hidden order block here, right? However, if you go down to the 10 hour, this has been weak. So this is not good for the 3 day hidden order block.
Exactly.
Okay.
So go for the
So if I
daily,
go
for
down,
example, please.
okay,
I just want to see. You see also here the area has been wicked, and this is important
yeah,
because we refine on different time frames to see where there's a real hole in the chart. Like you can imagine it like a black hole which sucks
literally,
price towards it, and from there you will most likely get a
yeah.
reaction after those like gapped orders got filled. And the gap here it is like if you go
Okay.
down even to the hour or something, and there is still a gap, adds value to the level. You don't need to do this all the time, but it's definitely something to keep an eye on.
When you say it there's a gap, you mean like,
That the fair value gap, the FVG.
oh, I see. Okay. Uh, what I mean in this case, this got weak in the daily in the 1 hour, obviously, and then close. Yeah, that's what I tried to make this part. No, so here, part here, then so there. Okay, and then now, if we go to for a week, And the same happens with the order blocks, right? If you go to the 4 week and it's not touch, but then you go lower to different time frames, and you see that it's been wicked in, like, let's say, like in a 1 week, 2 week, and then go down to different time frames, and it keeps getting weak. That means that it's losing its strength.
Yeah, the less touch, the better. But this is especially true for the gap stuff. Like for example, if you refine this block into like low time frame stuff where you have some hidden stuff within it to refine it down, then you want to see, like as said, is especially true for the gap stuff, but obviously also for blocks. Always, if there is an area on the chart which is less touched, it becomes more optimal.
Okay. Okay. So is there a way we could redefine this right now? Does it make any sense?
What do you mean?
Like if we wanna refine this, like even though I'm in the trade already, like would that make sense? Or maybe because I'd like to maybe do an exercise together with you, and then you can like you can advise me, give me a little feedback.
Mm-hmm. The thing is, Forex is not my specialty. So
I
on
see.
stocks, I could easily tell you no need to over refine this. On Forex, it could make sense, for example, to now go down and skip, for example, the 7 day, 6 day, 5 day, 4 day, 3 day, 2 day, and see what's within this block, and we can analyze it together.
Okay, let's do this 7 day. This already touching this one. Okay,
No,
so 7 day, 6 day.
no, and the candle that happened before has nothing to do with the block in this case. Because the block was formed after. The block is a consolidation, and then you have a strong move from there. So the block is more or less the demand for the move after. So in this case, it's also an untouched block from here. Yeah.
This one.
Yeah.
Okay, but even though the price is hitting right now, huh?
Yeah, now it's touched, obviously, but before this happened,
Okay.
like
Exactly. If we go here, actually we could do that. We go here. We can actually try to clean this up a little bit. Okay, so we have this. Then we go like this, right, for this one?
yeah, you can even include the whole block. I mean, it's a little bit off, but this
Okay.
is like, yeah. So for this, and
Okay.
for a good example for a touch block, if you stay on the 7 day, is, for example, the one left from your mouse, like the one who looks like a little hammer. Yeah, this one. And the next candle you see opened at the body low, wicked to the downside, and then went higher. So it took the demand before it went higher.
Exactly. Perfect. Thank you. So we have this one is 7 day. Let's do 6 day. There's nothing here. 6 day, 5 day. There's this one, which is pretty cool.
Yeah, can add this.
4 day. Same. 2 days. Nothing there. 1 day. Nothing there. And then we could do what, like 12 hours and 4 hours there.
And now, for example, now you see the whole candles, the whole area you marked, you see the consolidation, right? Price is very compressed there.
Yes.
And then you have the big move higher from there. If it went even higher and higher and higher, like if you have a consolidation like here, the stronger the move after and the higher price goes, the stronger the demand usually is. Obviously, if we have another consolidation like here and we then went higher, like then the next demand is the next demand, right? But this in this, for example, if the next white big candle would be bigger even and the whole move would be more trending, this adds also confidence to your demand.
Okay.
Because
Okay.
whales bought even more aggressive. So the higher they push price, the more aggressive they push price after consolidation, the more likely this level is going to be react again.
Okay. I like that. Makes sense. Thanks. Then probably the 6 hours is gonna be, yeah, same as you mentioned. There's this one little here, but it's outside from the box that we had before, so we wouldn't count this one. And there's a little one down here too. But this one got touched by this week, and there's this one too. Huh?
Yeah.
But I would focus on. Would you focus on like? Would it make sense to go like this? But then I would probably focus on the. Well, I mean, this is more discount actually.
Yeah, so for example, what you could do, depending on how you like where you take profit is and everything, you could then say, okay, good. It's probably wise either to split the trade in two different ideas, take two longs in tight, or play one big like like we had today as well. You asked about this. You can then only trade the upper level or only trade the lower
Okay.
level. But in both cases, um, like as at the extremes it gets um more optimal. So I said I'm not an expert in forex, but if you for example then target
Ah,
the highs, it will probably be a 3R trade if you cover both. What the lower block is telling you is just that within your level, even at the lower end of this higher time frame level, there is still a reason for price to go.
okay. So definitely, if I do one SL, I would cover the whole thing. Otherwise, I do the split. But this is the way to refine, in this case, an order block.
Mhm.
Okay, and then there's in terms of Fibos, do you do like I know that you probably do. I don't. Well, I'm assuming you use Fibos, but like, do you do one swing for this one, and then mark, and then another one for this one, and then another one for this one, or you pretty much just try to go from the lowest to the highest point?
I go from the lowest to the highest point because I define this as range, as swing, and I just want to see if it's in discount of the swing in this case, or in premium if it's a short idea, and also if it adds
Okay,
confluence to my level. Because then otherwise I
okay,
could
nice.
pull the thing to I could pull the fib to every single swing and then force my bias and say,
Exactly.
yeah, oh yeah, there's perfect alignment, perfect alignment. Makes no sense. So for me it's the full one to see if
Okay.
it's premium or discount.
Okay, perfect. So in this case, it would be this one so far. I mean, if the price goes up, then that may change. Well, actually, we can see, move this forward. There's more. Okay, so we have the FIBO up here, and we are in confluence. Ah, all right. So this is not ideal because there's no confluence.
There's no perfect alignment of the fib, but overall you know that it's in deep discount and this is good.
Okay, okay. So this is a trade that potentially, most likely, we should be trading, huh?
As said, I'm not into forex. I don't know which levels kind of are good,
Yeah.
but if I would see this and it's a stock and then I have a macro thesis that it's going to go higher, I would like the demand down there just from a demand perspective.
Okay. Okay. So then so far, this is what we've got, and I have my. Well, you see what I did here? So I didn't cover this part, and this is way too wide now that I think about it. Let me open up this. Wow, nice. Well, I'm learning, which is good. As you know, this is the 4 week. Like the gray one is the 4 week, and this is already past close to 50% of it. It went, yeah, it went over the FIBO. It passed the FIBO confluence. However, there was a small reaction here. Well, I mean, not yet.
If you want, I can also
First,
show you an execution tactic, which makes it way easier to define when you entry where your entry is, because this level is kind of wide, right? And you don't want to enter too early, but you obviously also don't want to get front run. So what I would do here, first of all, I would pull a trend line like from the high from for the first angle. If you if you want to hear this, not from the high, from like yeah, from the
oh,
top, and then you drag it like in the same angle like the upper one. Yeah, like this, like this. This is good.
good.
So
Okay.
the problem with a move like this is that it's nuking from here like very aggressive. And if you wait for a shift in trend, it might be a little bit too late, and then you need to enter early. So now what you could do is go, for example, for the 2 hour and define the steep angle which goes into the level as this one,
I
yeah.
see.
Yeah, like this.
This.
And until this trend is broken, there is no reason for you to enter this level. Why? Because it's still a downtrend. Not even momentum has shifted. Obviously, horizontals mean even more, right? So your highs and like the horizontal supply and demand rules, they mean more, but you can use those trend lines to define if it's already time for you to enter the level. And maybe we have time to watch it's live, right? Or it's is it replay? No, it's live.
It's live, yeah.
Yeah, so we can now watch. Maybe we will get a trigger or not, but as said, this is not like a guarantee that the level will work. But until this steep downtrend is broken from a momentum perspective,
Uh-huh.
it makes no sense to enter the trade because then you basically enter against the trend.
I see.
Should this start
That
to break out, you could consider an entry.
so pretty much is like, I mean, for me to understand, pretty much like this, and then this keeps going down, and then there's like boom,
Yes,
we see
this would
this,
be your entry.
and then this is my entry point. Yeah, and then because I think that makes a lot of sense, um, which means that obviously I need to be staring at the chart. Because usually the way I've been placing trades now is with limit orders, so I never do market orders. Like so far, I've done market orders, but I think that obviously this makes a lot of sense because it gives you more, like an advantage in order to see when is a good time to get into trades.
Exactly. It just adds confluence. It just adds another layer of protection. And still, after even after this shift in momentum, the level could still fail, right? There's never a guarantee.
Yeah,
But this is a little like a tool which you can use to be more selective and say, oh no, it's just like going lower. We have not a shift in momentum. Why would I enter this trade? Can be very
totally.
powerful.
Okay, nice. Thank you for that. I like it.
Yeah, sure. I use it a lot also on my stocks and
Oh,
everything, and oftentimes I have an area like you. I have an area of which I want to entry, and if which I want my entry, and if I then see like okay, we are in the level or near the level, I draw my trend line and I say okay, good. Until this is broken, I don't enter, and then I have an eye on this chart. Like I don't stare at it because we're looking at the 2 hours, so it could still take 2 hours, 8 hours, 10 hours before something like your arrow here develops. And so you have time. And it also no problem if you then still enter at the top of the level, or if you can enter lower, it's even better, right? But you don't need to have the perfect entry. And
I
so
see.
there's no reason to stare now because as I said, we're still at the 2 hour. This could take even a day or something.
So you mean that maybe the price goes like this, more or less, and then I mean that doesn't make a lot of sense.
Yeah,
And
It
then you
makes it
could
makes
probably
actually
even make like an entry here. Sorry?
it makes actually sense because oftentimes when the trend shifts, it then accelerates a little bit out of the level where you think like, oh yeah, oh damn shit, I got front run, or damn, no, I'm not on the size which I wish, and then it suddenly pulls back very sharply, and then you think like, oh no, shit, I entered too early. This is what price
I
loves
see.
doing. So actually, arrow makes sense. And I'm not saying you need to like time it perfectly or anything. And I'm not saying that I know how long it will take or anything. I just wanted to tell you because you said staring at the charts. You don't need to stare for this, especially if you trade higher time frames.
Okay.
You still have like plenty of time. Set yourself some alarms. Like when you like project where the trend line could be broken at a price level, set yourself an alarm if you get it. Have a look at your phone. Oh yeah, it's breaking it. Let's wait for the close. Obviously, same story as with horizontals. You want to wait for the close, and then you still have probably
Uh-huh.
a few more hours or like an hour or something to enter your trade. There's no need to rush it.
Nice.
Just play with this around, try it out. As said, can be very helpful for execution. Also,
Nice. Amazing. Thanks. And
could
go
could you
ahead.
could you like activate or turn on your volume bars? I have no clue about volume on Forex, but I know like absorption, all those things work on every single asset. It's usually you can find it in indicators at the top. somewhere.
indicator.
Yeah.
This one.
Yes. And
Okay.
let's see how, okay, volume on Forex looks different than I'm used to. So what you want to see basically is above average volume. So you could add to your volume bars, you could add the MA, but you, if you go to this little arrow where it says 6 on the left upper side
Uh,
below sell.
left upper side that says. Oh yeah. Okay. Here.
Yes.
Settings.
Yes. And then if MA, um, it's probably on, but in the wrong color as it seems. Maybe on style, you can change the color of the line. Volume, MA, here you need to tick the box.
Uh,
And you what you want to see, for example, you can also check out the study area for that. For looking for volume spread analysis, signs of absorption. You want to see above average volume. You need to consider that you have sessions. It's British pound against New Zealand dollar. You see where there's low volume. Oftentimes it might be because of
uh-huh.
sessions. But what you want to see is above average volume and, for example, a big shade at the low. So, for example, if you enter the level, we start breaking the trend line. You see some kind of big wick at the lows after a candle closes. You can check a few timeframes for that, and that could add another confluence for you to execute the trade.
Okay. I like that. And you say that is different from stocks. I'm assuming stocks that you see more like it's different. You see more differences here in terms of volume because here is pretty steady, right? That's what you mean.
Yes, it's pretty consistent. And in stocks, oftentimes you have then phases of very low volume, and suddenly once you reach a key level or something, the volume goes pretty high.
Uh-huh.
And there's a simple rule of thumb: high volume, less. So if you have high volume but price is not really moving, you have a lot of effort but no result, right? So somebody's absorbing this.
Okay.
If you have a lot of movement in price but low volume, you have low volume, you have low effort but high impact, or what did I say before? High result. And this is a
Uh-huh.
kind of a divergence. These are more or less whales footprints. And as I said, I can't really tell if how and if this works in Forex too, but I know in stocks, if you have, for example, those big aggressive moves and you have it on high volume, then it's an alignment. If you have big aggressive moves and the volume is fading into the move, it means a bias exhaustion. And if you then add
Okay.
absorption wicks at the tops, like you still have above average volume, and like a candle closes with a very tight body and a big wick at the top. For example, go at the top there. Let's just check if this is working here. Go to the top and let's check some candles. You have this big, like where you started the trend line. Zoom way in, please, to this candle exactly. So what we have here,
Uh,
the
something
one
like this, huh?
the one with the big wick, like this one. Do you see how
This
big
one?
the, yeah, you see how big the volume is? It's way above average,
Yeah.
and it has a big shade at the top. This is whales or institutions absorbing price, trapping bias at the top, and it adds confluence as a reversal sign. Let's go to other recent
Okay.
top. Let's check this. Um,
Where? This one?
no, on the left, like major tops, not in between, but major tops
Okay.
on major pivot lows. Also
Um,
the
maybe this one?
yeah, this one, it's different because it's a pretty big imbalance, and it should be on high volume like the next one you see, the big imbalances. If you go
Uh-huh.
there, it's also alignment, right? You have a big body, you have high volume, so it was
Uh-huh.
big effort was made and you have a big result. It's not really some kind of divergence, and you see price goes also higher from there. Maybe go more to the left. Let's check if we find another prime example of a reversal. Let's check the low there where we started the level.
This
Yeah,
one.
let's zoom in there a little bit.
Yeah. Okay.
Okay.
One is low. Bottom is low.
Hello, Victoria, by the way. Yeah, so at this low we have
Yeah.
low volume. So not like adds no confluence to my thesis. As said, I have no data on Forex for all of this. But
Uh-huh.
doesn't really add, in this case, doesn't really add anything. So
What about this one? like all this volume. This is selling volume, right? Oh well, there's a big wick here.
Mm-hmm.
Interesting.
It's selling volume. Why? Because the candle is in your case blue or red. But in the
Yeah.
end, we have the wick to the downside. So volume was, so you see we have a lot of effort. Again, a lot of volume, a lot of like shares or lots have traded, but the result was not as negative. Even though the volume bar is red, we have almost like a neutral candle. It's closed a little bit lower. So effort was made, but we have almost no result. And now, look, this is also a good example for understanding the whole stuff. Go to a lower time frame, mark this candle somehow that we don't, or this area that we don't lose it. And then,
Yeah.
for example, go for the 30-minute, and let's check where most of the volume was traded in this candle, because I have a feeling that in this case, most of the volume was traded on the way up because the move was upwards afterwards.
30 minutes is fine.
And here you see, yeah, see how big the green volume bar is and how this, like, the most volume in this whole move was traded within the upwards move. And this is what the wick on the downside is showing you, that the most of the absorption, most of the volume was not traded on the way down, but on the way up. And this is just showing that big buyers were stepping in at this particular candle. And this is why it's important to check different time frames, because as I said many times before, if you go hunting, you have a scope with like zoom, and you looking at lower time frames in this case is like zooming in, like splitting the candle up into many pieces and see where the actual volume was traded. Was it more buying? Was it more selling? This is what this is for.
Nice. It makes a lot of sense. And then here you're thinking that buyers are getting ready for the price to increase, right? Because there's been a lot of like effort here in terms of volume in order to like literally push the price up, meaning that they're buying, and eventually this turns into like with a because the prices increase pretty much, no?
Yes. In this case, it's obvious. Obviously, afterwards we can always easily within
Yeah.
this and within this formation to say, okay, this will lead to higher prices. Is a different situation. Obviously, now we see, yeah, obviously it went higher. What's interesting is that the rest of the move after that was on pretty low volumes. You see, very
Uh-huh.
very few effort was made, but we have a lot of result with low effort,
Yeah.
meaning there's no big seller. There's no big seller at all. Buyers had an easy time to push price higher. And the
Really?
reason for that might be that either there's no buyer stepping and no seller stepping in, there's bullish news, or um, one trader is just dominating them all and has absorbed them within this little box you drew. Zoom out a little bit more.
Okay.
Let's check another high or another low.
There is maybe.
No, zoom more. We want to look at real pivots. This is all like more or less
Ah,
ranging
okay,
here.
okay.
Like after this on the left side, this big FVG. Let's check this one. And the move like after, right? Yeah, we have above average volume, haven't we? And at the top candle, yeah, not that clean, not that clean. Maybe check the 1 hour for this one.
The 1 hour?
Mm-hmm.
Oh, where was I? Is it this one?
It
It
should
was this one.
be this one, yeah. Oh no, I think it's
Oh,
not this
there's
one.
more.
No, it's not this one.
No, it's not.
It's after our green
Oh no,
box. Yeah, yeah. Here is it. Here it
this
is.
one probably, right?
No, it's the big one on the left side with the big FEG.
Ah,
Yeah,
yes.
yeah. So let's check it candle
But
by
then
candle. We have big volume, big effort made, big result. This is good. This is alignment. Here's no real entry trigger for that. To be honest, no trigger at the highs, nothing, no divergence, nothing to spot. To be honest,
okay, okay,
maybe
that's fine.
zoom even more out. Go for let's check a real pivot high. Let's go for the 1 day. Let's do this example. Let's go for the 1 day. Check like a real higher time frame high. Here, for example, like before the big
This
drop.
one?
Yeah, look at how high the volume is. Zoom in and let's check
Oh
the
yeah.
candles. There was a lot of stuff going on. You see the big wicks at the top, lots of volume. Mark this area and let's check a lot of time frames. Let's go for example, for the 2 hour or for the 1 hour again. And let's check how this biggest volume was traded.
Where is it? Here.
There was a lot of stuff going on here.
Yeah, that looks a little crazy. Okay. This is a candle here.
Lots of volume in both directions. As it seems that for that we could then check lower time frames. We have a higher volume into the lows. And up here we have, you see, interesting example. This is a good example. You have the big white candle, the big white candle. Low volume, low effort made, big result. Everything is good. The next candle has higher volume. You see the next candle has higher volume, but so more effort, but less result. Why? Because the full body of this candle is smaller. So we have higher volume, but more effort, less result. This is important because this is also a sign of absorption, even though there is no big wick at the top on this candle. Usually, if you want to see a trend continue, you look at the candle body at the first, like, do you have the first white one? Big body, average volume. Next body, smaller and above average volume. So more buying, but less results. Somebody's absorbing here. Not bullish. If you want to have a strong trend, best case, volume is increasing and so is the size of the candles, or volume is steady and the candles go higher, or volume is even decreasing and candles get bigger, which could then also be signs of absorption. So this depends. It could mean that buyers are running out of steam, and then you need to check if there is a higher time frame resistance where they're running out of steam into, more or less. But this example is great for another absorption example. At the lows, for example, if you go to the big wick on the right, yeah. If you go for low time frames, we will see this big wick at the lows probably was on high buy volume. In this case, we have a big shade at the lows. You can go for the 15-minute or something. Yeah, mark it out.
No. Oh man.
It's way earlier.
Is there a way you can like leave a 30-minute to stay in the same time, or you need to always scroll around to find the?
Is there no history? Oh, there's no history anymore. Maybe we can check the 30-minute. Yeah, there's a way. There's some kind of setting, but I have not figured it out, to be honest. For me, it just jumps around like crazy still if I use it.
Okay. I could actually go like this. Okay, I think that's gonna work. And then maybe we do 30 minutes.
This is
Nice.
actually a great trick.
It's
You
good.
see, prime example wick. If you can enter on this wick, that's great. Even though the wick got completely filled, you could have taken a profit at the small demand, at the small supply, and maybe even re-adding back at the wick if you feel like very comfortable in this trade. But this is like very high above average volume, the highest volume of all. If you would go down to lower time frames, you will see that the whole wick is filled with very strong buying. And at the same time, you see the wick still got filled. This is typical forex stuff. It usually always comes back, and then it goes to the final target. This is what I figured. On stocks, you oftentimes don't have that, which is way more lovely. You can go down to the 50-minute. This is actually a very clever trick with the replay mode. This is a very clever trick.
Now in the 15-minute, you wanna go to the 5-minute?
Yeah, let's check it. On the 15-minute, we see the highest volume was the buy candle right after the low. Let's check. You see it's even a wick on the 5-minute. Crazy move.
Oh wow. Oh wow.
And again, still a big wick at the lows. Now the volume looks red because the candle closed lower. But probably, maybe we can even check the 1-minute to see where the most volume was traded.
No.
2-minute?
Unavailable. 10-minute. Oh.
Here we go.
Yes. And where is it? Here. Oh wow. I mean, there was literally a lot here.
Yeah. So in it indeed the blue candle has the highest volume. This is interesting, but obviously still with a big wick at the lows, and the following candles were very high volume. So
Uh-huh.
buyers were stepping in after this big absorption, big flush event, and then going higher back to the next supply. Interesting pivot
And
point, but obviously, as said, it came fully back, filled the wick completely. Not very nice to trade, I guess. TP1 probably stopped at break even, and then that's it.
yeah, probably.
This is what happens a lot
Wow,
in
okay.
forex, for what I've
Interesting.
seen. TP1 break even, and then if it goes back, if it goes higher, if you make more, that's great. But oftentimes that's it.
Okay. Interesting. Well, thank you for that. I'm gonna look into the volume stuff when placing trades. Um, I wanted to let's go back to the last the trade that we were talking about before. So here I had a question. I think that was probably what 1 hour. So we have these two trend line draw before. If the price goes up here, can it probably just bounce back down? Because this would be still part of the trend, right? Like that's something I'm assuming I need to look into if I see a situation like this one.
Hmm. A good rule of thumb here is the less obvious the trend line and the less touch, the better it is. I would not trade the trend line. I don't really like the RR and the risk to reward of those, but a lot of people do actually. And this the upper one is a very obvious trend line. And while I
Uh-huh.
still could see a bounce there, like back to the level or something, I would never trade this. But in this case, it also the upper one is not really helpful because it's so way above the level, and the second angle is so steep into the level, which is good. This is what we want to see. That we only use the steep one to
Okay.
define our entry. The upper one you can leave it as confidence. You say, okay, good. If this is taken out, it's more likely for price to go higher. But it doesn't really add any value to this idea. So the upper one is basically more or less useless for this idea. But sometimes you will
Okay.
not get anything better than that. But usually um, you will find a trend line which makes perfect sense for the level. And in this case, it's the steep one, the lower one, which you can use as confluence.
Okay. So I wouldn't worry too much about like placing maybe, the price goes here, like literally the price is here. Like we see that there's a break of the trend line and then I get into the trade here. I wouldn't worry about this trend line, right? Being like, oh, but maybe the price goes here and then it bounces back down to the level. It is pretty much it is what it is, no?
Exactly. So the trend line does not change the overall trend idea of longing the 4 week here. The trend line should only give you confidence for the entry, and it should not define your take profit or anything. But as said,
Okay.
as long as the steep angle is not broken, there's no reason to be in this trade. And the upper one
Okay.
might, if you leave it, you might see that price will bounce there, but it should not affect your decision making then anymore. If it
Okay.
breaks out from
Perfect.
there, obviously it adds confidence for higher prices. But I would, after the point of like entering, I would then look at horizontals and supply and demand over trend lines.
Okay. Makes a lot of sense. Thank you. Good stuff, man. I appreciate it. I I would like I have another trade that we could go through. I know it's 10, well, it's 10, it's past 10 a.m. here. But I would really like to see the way you would chart a stock. Is that something that you could show us? Like literally like live in terms of, okay, this is a stock. I'm gonna chart this one. This is how I do it. I like to see it.
Okay, sure, we can do that.
Thank you for all the insights. I really appreciate it.
Yeah, of course, this is what it's for. And I think those kind of sessions where you chart or you guys chart and I tell you what to do and what I see could be very helpful. And it's also nice for me to not always to my charts and this and that. So I see also what you think and how you approach a chart, because everybody opens a chart different. Everybody scales it different and all that. And so
Yeah.
it's very helpful to see different perspectives, I guess. Good. If you want, I can pull up a stock chart. Just give me a second.
Yeah.
Need to do everything correct with the recording stuff. Give me this window. No. Let's do it display. And go for this one. This is still full screen. Can't you make it smaller for me, please, computer? It's so weird to record with OBS. It always like changes the size of my windows.
Oh yeah. Okay. Yeah, I feel you.
Okay. Should be good. Now I share it with you guys. Okay. So how do I approach a stock chart? As I said you before, I look usually for narratives which I'm interested in or which I see some kind of potential or whatever. I don't care too much about the narrative, but I actually like to split my stocks into narratives. And this is, for example, so I I probably should start with a complete naked one to really,
Yeah. Let's do brand new if you don't mind.
yeah, a naked one. Yeah, tell me a stock which you like would like to see. Let's do it that way.
Okay. Beam. BEEM. Beam Global. Yeah.
Okay. Okay. So I first of all I look at it at higher time frame. So this chart looks not familiar. I usually trade charts that look familiar to me. It's like something kind of structure I've seen before, because structure tends to
Okay.
repeat. I've not seen a chart like this
Okay.
before. So let me still try to do my analysis. Obviously, it's in discount. I mean, it's even below all of those lows it made before, which is a good thing. Does not mean it's like must buy, but at the same time, it adds like buy confidence, obviously, right? Also, what I am always looking at here is volume. What I like here is that volume is increasing here overall in this area, but we have also some big spikes. What I also do is I check the general volume, average volume, 1.5 million in shares. This is always in shares, which then like x3, 1.5 x3 is 7.5, right? Yeah, somewhat like that. So it's actually below my threshold. So I would like to see at least 30 million in dollars. I mean, if it's 20, 25, that's all right. But 30 million usually is my threshold to define if I want to trade stock. So this would probably remove this already from my area, from my interest list. Um, only
Okay.
could you mute your mic, because I hear myself talking at times.
Oh, sorry. Yeah.
Sorry, you can still ask questions in between, but maybe turn it off in the meanwhile. Thank you. Um, so it would probably remove it already from my list of interests, simply because it not like is in my volume requirement checkbox. And if, for example, if I really like the company, the narrative, the idea, if I have a macro thesis why this stock would do well, maybe I will add it. But this obviously removes confluence. So low volume removes confluence, because then it makes it more shittier. The whole overall asset makes the asset more shitty. So if I've done this first analysis, the next thing I do is to define premium or discount, and this one is pretty obvious. It's definitely discount. Like Victoria said, it broke the low, which is not good, but it could also just be a fake down with the volume increase here. Maybe there's something to it, but as said, this stock is, for me, it's already out because it broke the structure to the downside. It looks very odd. I haven't seen the structure before. Usually, as said, I trade repeated structures over and over simply because I then understand what I'm trading, similar patterns. Um, but let's keep on analyzing that. Let's imagine this is from a fundamental perspective such a good play that I'm really interested in. Then I look at VWAP. In this case, doesn't really add any confidence. We are below VWAP, but we are way like away from this VWAP. Doesn't make any sense. Not a good confluence in this one. I think we will have better confluence with the volume profile tool, which adds good confluence in this case to this area, simply because the most volume ever traded in the stock was down here. So a lot of trading is going on within this area, even though price has spent very little time in here. So it seems to me somebody tries to accumulate this, but we need then to look deeper into this area to define if it's also maybe just people selling into this. So it's just volume. Doesn't really mean it's big buying down here. But it is not that bad. Should we like remove this area from here? It's still actually a lot of volume at the lows, which is good. So big buyers were stepping in over and over and over until this point that where they didn't. So this could be a fake down, this could be manipulation, but this could also just be a reason that just be a sign that those buyers that were always stepping in at this point, they were always like also maybe the reason for a pump like this, they're not interested in this asset anymore. They're not willing to hold up price. Could be both. Um, let's check the area here itself. So we are at the point of control, usually not the worst entry if you put it into context of higher time frame premium discount. Here within this candle we have a big wick at the top. Here within this candle we have two. Still price went a good chunk higher after. Let's check the daily. And here we see actually here down here. Oh no, interesting. It's a red bar, but the candle is green. So here big buyers were stepping in as it seems. Not that clean though. And also here after the gap, big volume was traded. Not that clean after all. Also, this could be a double top here. But we consider that this is like from an interesting stock from a fundamental perspective. Here's where the trend lines come in. Difficult to pull. Weird asset, weird structure, weird asset. Do not trust it. But I would probably pull it like this because steep angle and all that makes no sense anymore. So we broke this actually. So this adds confluence of being long, and we broke all other angles as well. So I could pull it like I wish. In this case, I could also pull it from here to here. We broke this one from here to here. Not the best demonstration of this trendline thing in an actual environment. But obviously, as said, also the steep ones have been broken. Still, it went lower here. This one adds confluence, doesn't mean anything in the end. So for a potential target, let's say I'm happy with the stock, which I'm not, but let's say I'm happy with the stock. I want to trade it. I would then mark this out as supply. No reason to over refine it or anything. I would set an alarm here. I have my 0.5 somewhere here. No reason to like drain the last few percent up here. If it goes to this supply, it would already be a crazy performance already. So because it would be a crazy performance and because I don't trust this stock, let's pull some more supplies here first. This is also strong supply. You see here, little consolidation, strong sell-off, very strong sell-off. And also here, and you see here as well, but this we have already taken. So probably this little consolidation as first target to don't be greedy. As I said, I don't need to refine this a lot. No reason for that. 0.5 aligning with this one. So let's imagine we go higher from here. This would be the first logical target, but I would take profits here and here already because it's a very high risk stock for everything I've seen. And so definitely big TPs before that. And for that, you can still then again use trend lines. I can show you examples of defining how long the trend lasts, and once it breaks, you just TP. No reason to there is often no reason to predict anything, to predict higher prices, lower prices. A lot of times it's also just looking at the chart and letting him tell you the story. And in this case, it starts making high highs, so it's wise to expect to at least like this area. Probably, maybe you should even like refine it a little more to this area here. And from there we will see, so should we just go higher? What I don't want to see is breaking this. So we are at an invalidation point right now for me. If I wanted to enter here, I would do it probably somewhat like this. Somewhat like this. No close below this trend line, no break below that would be a criteria for me. Something like that. Still a 17% stop loss, very aggressive asset. You could then also consider this supply, but if you want to play it more safe, in this case I would do that definitely. And from here on, it just all is trend. So we have two options. For example, let's imagine that we take this entry and it does this. Obviously we got invalidated, the stock probably goes to zero, whatever could happen. We don't know. Next story, it works. Maybe does something like that. And then it goes higher, even steeper. And from here on, the question remains, can we hold this angle up? Like I would then connect these lows and say, okay, good, it gets steeper. If it holds all of that and goes higher, so basically you could imagine my stop loss like this. So like this. Trailing, I call it momentum trailing. And if it goes higher from there, good. If it breaks down from here, I'm paying probably a part of my profits back, taking a partial TP here, and then the question is, will we hold this? If we go higher from here, great. Then I have maybe taken here 25%, and once this trend line here got broken and this low, I took another 25%, TPing up here for around 50% for around 4 hours or something, and then I can push this trade higher. And should it go higher, obviously, if this also breaks down, the trade is invalidated fully, I would then cut the complete position. But if it does this, I can then define a new trend. And if this is continuing, like the steepness of this one is continuing, I can trail it as long as it lasts, and probably then looking to TP once this breaks. And what the steeper it gets, the closer I trail my stop loss, because the steeper it gets, the quicker it breaks down. And so I want to, the steeper it gets, the closer I want to have my stop loss there. And if I also like the whole macro situation is telling me we're probably going lower because of the SPX and all of those things, I rather like play it like tighter than wider. And what I really do with all of those trend lines all the time and the momentum trailing, I always more or less define a new trade, because you could see it like that. If this trade continues going higher and maybe going to this high, and I have my trailing stop loss down here, so like that, then if it goes to this target, it's still a 4-hour idea, right? So it makes sense to not TP everything here, because I am willing to pay, in this case, 40% back for maybe another 50% on top. So the risk to reward of doing that, of not closing the full position, is there. If it would look like this, if this is my best case target, and I say, yeah, maybe it goes up another 70%, but if I lose it, it's 40%, the risk to reward here makes no sense to do that. So I would TP more or even the full position. But with those, oftentimes they just keep on pushing higher once they gain momentum. And so momentum trading makes a lot of sense to me. But this is like personal preference. And as said, this also means you have price going against you before you TP. Some people can't handle that. Some people say, oh yeah, but what bounces if it bounces back and all that. You need a lot of discipline for this stuff. But at the same time, it can be very rewarding to push the trade a little higher right after. But this is just me, my strategy. And this is basically how I would approach this stock particularly. We can also talk Aristo. That's what the stage is for. If you have questions.
Hi, thanks. What is the tool that you use? I wasn't familiar with that one. When you were in the high time frame, you checked two things. You checked the volume, that one, and then another one
Yeah, so this one is
that I'm not familiar with.
the fixed range volume profile. Do you know that probably?
Oh, yes,
And we have
the all of them.
this other one is the VWAP, um, anchored VWAP, and it's volume weighted average price. So it takes the volume X price and makes you an average. And in this case, it's not very helpful. It doesn't really like show me anything. I would never use it. That's why the fixed volume profile makes more sense in this one. But if I, for example, go for soybeans, this is the VWAP ever since this chart exists, and it makes like here it added like perfect confluence, right? I did not look at this chart back here in 24, but the reaction from the VWAP and the VWAP telling us that here is an area of support was actually kind of great. In scalping, you need to treat it different, but on higher time frame, it can give you a great area of interest as confluence.
Thank you. Oh, that's great.
Victoria said in the next
Thank you for
session
chatting.
Yeah, sure. No problem. As said, this is what it's for. You can always ask, make requests, what we should do, and all that. Victoria asked in the next session we can cover level invalidation and what to do in such cases. We can do that. I think you mean also like kind of position management. You also ask if you use flag patterns. No, I don't. Actually, I know that. So if I so I can give you a great example. Actually, it's probably better than talking about it. So you could consider it a flag, you could consider it a channel, but usually if something looks very bullish, it's not very bullish. And especially in low time frames, if it gives you the impression if it gives you the impression of, oh yeah, this is bullish, this is going higher because it's like going up and let's maybe go for it. Oh god damn it, I hate the web version of TradingView. Don't know why my app is not working. By the way, yeah. So you will see a lot of those bullish channels. You can call them flags or whatever, right before big nukes. Simply because like these upgrinds, they make people bullish. They make people buy. They make people like long, and then the big sell-off comes, and you will see a lot of those bullish channels. This is why a three drive works, right? You could also make it a channel and call it a flag or whatever, because it's a higher high, higher low, high high, high low, and this makes people bullish. Not only those who look at the charts, but only those who look just at the numbers, because the number go up for a few days just before it goes down again. You see a lot of those channels and before big nukes. Always price always feels the most bullish before it's bearish. Obviously, it's not always the case, right? You need to put this in context, and this is why I don't really trade them. But especially before bigger downtrends or before bigger sell-offs, you will usually see somewhat like this, and then you could call it a flag. But I don't really know what the flag rules are and how do you call them and all that stuff. But in the end, this is how I see them. Um, like how to use trend lines. Yeah, me too, actually. As I said, I never trade with them, but I always add nice confidence around levels. he used yeah, Money Tower used flag patterns. He also used trend lines and all that on his old charts, the purple ones. Um, and I don't know why he's not using them anymore, but I think he's still seeing those things. I mean, if you like spend so much time on the charts, at some point you don't really need to mark out all the things. And I think he has so many things in his mind, looking at so many things at once, even though he doesn't mark them out, he knows about them, and it adds confluence or removes confluence from his ideas. If to decode monitor, from what way would you recommend to start? I mean, if you have planned to completely go through it, then do it. I think there's value on all of his charts, and especially like the old ones, as said, where he used different things. It also opens the mind for just also looking at other things, playing around with them. Um, and it's always probably interesting to see for you how he's developing over the years. Yeah, and it's always nice to see people's improvement and progress, like you said. And this is, I think, also why the group learning is so effective, and in this case, Aristo showing us charts, because people see your progress, can compare it with their own progress, and seeing just like adding more and more views to one's own analysis and learning is just always great. And so the more time you have and the more you can put into your studying and learning, the better. I'm in a BTC short, yes. Still in this one, and I added very low size here once I saw the wick, but it's only on 0.2% risk and on very wide stop loss, simply because the level for me got front run. But yeah, I'm in those two. I'm in the short and already put at break even. Why? Yeah, my level of interest got front run, like the one day I was looking at. Yeah, for 5 day. Yeah, actually kind of clean this touch. Haven't hadn't marked it out, to be honest. I was looking for the one day, but I said I'm in. Thought it's gonna be retesting, but it didn't. I thought maybe a third drive here, but probably these were already the three drives. And then now with this break and even the low here, I don't know. Doesn't look that bullish to me. Maybe we won't retest it. And the next thing is also FOMC. So I expect some fuckery today. Could also like end up in a moon candle. Who knows? They will very likely cut rates, but usually crypto price never does what people expect, and people think cuts are bullish. So we will see. Yeah, I mean, if you feel more comfortable, if you stop at break even, touch the 0.5 of the swing. I treated this as a higher time frame idea, so I would be if I am more or less a lot more a lot more relaxed with this position, because as I said, I see everything selling up here is very optimal, and so yeah, I give it more room. But obviously, whatever you do, you do you. Let's frame it like that. For me, these are swing trades, so I probably put my stop at break even once we reach the range low or something. Um, See no reason to do that already. All right, guys, let's wrap it up for today. Thank you, Aristo, for sharing your charts and for the little private session we had earlier today. I think we need to do a new poll. I think more people than only you, Victoria, have like time shift because I have no time shift here. And so for me, the times actually stay the same, but I think we need to discuss this for Saturday. Yeah, I saw your message. No problem. Time shift, the time stuff is confusing with the time zones and everything. I know that myself. I missed also some calls already and stuff. But yeah, um, let's talk again on Saturday. As said, thank you, Aristo, for showing all that. Probably very helpful also for other people.
Thank you. I loved it. Yeah, I think it was very helpful for me. So I appreciate your time. I think it was great. A lot of learnings.
Amazing. Great to hear. Okay, guys.
All right. Well, thank you very much. Enjoy
Yeah.
the rest of your day.
Yeah, thank you.
You
You
too,
too.
Victoria.
Bye bye. We talk on Saturday.
Yes. Bye bye.